I think that Bitcoin is going to trade above $1 million in early 2030s. 2032, 2033, I would be very surprised if we're not touching $1 million Bitcoin. Today, if you're looking at the power law for 211, it's 52.6, 52.7-ish, somewhere around 50 to 55,000. I would expect that it would test that if we get a steep drawdown in everything, because markets correlate to one. This is something that investment funds and hedge funds will be able to sell. And you sell what you can, not what you want to.
James Lavish's analysis cuts directly into this hidden machinery. His argument is not a short-term price call, but a structural diagnosis of how modern financial markets behave under pressure, why Bitcoin still trades like a risk asset during stress, and why that does not invalidate its long-term role as the ultimate debasement hedge. What we are witnessing, Lavish argues, is not a failure of Bitcoin's thesis, but an information arbitrage playing out in real time, against the backdrop of an unsustainable debt spiral and a monetary system with only one viable exit left. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
If you're a hedge fund, you're on portfolio margining, meaning that you're getting haircuts that are as low as maybe 2, 3, 4%. And with certainly 5 or 6% with your blue chip stocks, meaning that you only have to put up 5 or 6% and you could borrow 96% against it. Well, they move those requirements kind of dynamically during periods of stress. So if you expect there's going to be a period of stress, you're selling stuff over the weekend. Well, what can you sell? Bitcoin. So Bitcoin goes down over the weekend. Everything correlates to one, meaning gold and silver go down along with stocks. That worries me, because if that happens, Bitcoin's still not safe here at 78. It will go into 60s and test that, possibly test that lower band of the power law in whatever it is, high 50s now. So that's actually a good question, exactly where it is. So, and if you look at it as of today, if you're looking at the power law for 211, it's 52.6, 52.7-ish, somewhere around 50 to 55,000. I would expect that it would test that if we get a steep drawdown in everything, because markets correlate to one. This is something that investment funds and hedge funds will be able to sell. And you sell what you can, not what you want to. So does that mean that there's pain coming? Well, I don't know. I mean, but I do believe, Danny, that that Bitcoin over the long term is going higher. If things settle out here and this market resumes its march upwards, I would expect that Bitcoin will join in. That's my expectation, that we will go back and test our all-time highs again this next year. But that's a lot of ifs. I believe that what we are experiencing right now, Danny, is an information or a knowledge arbitrage.
Yeah.
And so people just do not yet understand how Bitcoin is different and why it is the ultimate store of value and the ultimate debasement asset. They just don't understand it yet. There's a lot of confusion. There, the mainstream media puts out confusing and hit pieces about it all the time. They commingle it with all the other cryptocurrencies, and they just call them all the same thing. And so I have friends who say, "Oh yeah, I own that. I own Bitcoin. I own the Solana one." And it's like, yeah, they just don't get it. And it's okay. It's not their fault. They're just not interested in doing the research themselves, and they're listening to mainstream media and getting their news off of Facebook or their research off of Facebook. They're just not getting it. And so there is an information arbitrage that you and I are experiencing right now. It feels bad, and it makes you feel like, am I an idiot? Am I just stupid how early am I here? And the answer is, you're still pretty early, because I think that Bitcoin is going to trade above $1 million in early 2030s. 2032, 2033, I would be very surprised if we're not touching $1 million Bitcoin. That's me. That's my thesis. That's where I believe this thing is going. But I also believe that part of that is that arbitrage, that knowledge arbitrage will close. And as that does, you're going to have the Harvards and the Yales and the University of Texas and the CalPERS and the Texas teachers and every pension and fire fund out there taking positions in Bitcoin as a core asset. And when they do that, that's when that knowledge begins to really spread, and people are like, oh, so Bitcoin is different. Okay, so Bitcoin is different. It's not just this moonshot thing. It's digital gold. Okay, then I should probably own some. And funny enough, is I think that that's going to be a much healthier rise for Bitcoin in price and a much more stable rise. It's not going to be this massive volatile thing. It's going to be like people are, oh, I get it. Okay, I get it. Oh, okay, I understand now. I understand how it's different. I want to say that Bitcoin's sniffing out that the markets are just about to get really hairy. And we saw a taste of it on Friday, right? So you saw, we had Warsh he was announced on Friday. Well, you kind of felt some turbulence before that because you had Powell come out and, for the first time, I hadn't watched him talk for the first time in a while because I just figured he'd be saying the same exact thing. And he came out a little bit more hawkish than even I expected, But let's be clear. This is now, it's not even political. It's personal for him, He was so humiliated by Trump when Trump brought him into that facility the new Fed facility that their new Fed building or renovating, right? The $1 billion renovation. He brought him in there. They put hard hats on. And Trump's a big guy. And you've got little Powell in his tie and his big hat on. And he just looked, he knew that he knows what he's doing. He made him look like a little caricature, like a little boy.
Lavish suggests that Bitcoin may already be signaling rising macro instability. Recent market turbulence hints that conditions are becoming hairy. Federal Reserve communication has grown more hawkish than expected, and confidence in a clean policy path is weakening. He frames Jerome Powell's current posture not merely as economic strategy, but as legacy management. Powell, nearing the end of his term, wants to be remembered as the architect of a soft landing, independent, resolute, and not politically influenced.
What do you think Powell's thinking? The most powerful attorney, basically, in all of finance, right? Being the head of the Fed, not really an attorney role, but but he's humiliated. Now he's like, "Fuck you, Trump. You're not going to push me around." And so his legacy is he wants to be known as the guy who engineered a soft landing. I mean, look. The reality is, people don't remember they won't remember all the things they did before, and they're going to remember these moments, right? Now, you and I will remember that he printed over $5 trillion in 2020 to 2022, and that's what caused all this. That's what caused this inflation. And he's been reeling ever since, scrambling, trying to, tamp it down. He went from this is just transitory to, well, now it's possibly because of tariffs to, oh, we have it under control. And that's what he wants. He's done in just a couple months here. His term's over. And so he wants to be remembered as the guy who engineered the soft landing. He wasn't pushed around. He was apolitical. He wasn't, he wasn't in, cahoots with the Treasury, with Bessent or with Trump, and he was independent and he ran the Fed independently. We both know that's ridiculous. They cut rates twice before the election. Yeah, before Trump was elected, before the presidential election here, and then they just stopped. And that was like, well, I mean, I'm wary of that them juicing the economy, lowering rates, heating it up, because then you're going to have inflation again. Mm-hmm. Inflation doesn't come on right away, though, as we all saw. You print money, you buy bonds, and it filters in through the Cantillon effect, and it kind of filters in that way. And so it takes time. It certainly won't happen before the midterms. Even if they started printing today, it would be difficult for that to happen. So I don't think he's worried about that. He's more worried about, let's keep the economy juicing and we'll manage it. We just won't let it get out of control like Powell did. That's what he's thinking, I bet. And so he's going to play that game. He's going to try to, walk that tightrope. It's a tough one to walk, as we've experienced. But you don't have to come in with a bazooka. You don't have to print $5 trillion. I don't think, unless there's some sort of credit issue or a credit event or black swan, then you're going to have to print more than 5. You might have to print 10. And that's the scary part. And on the backside of that, of course, Bitcoin will not benefit, but it will reflect the devaluation of the dollar on the other side of it. That's what it will do. Now you've got inflation raging, the Fed's having to raise rates. Yellen knew this was going to happen. She had to. I mean, she had to know, and she didn't. She missed her opportunity. She didn't term out the debt. They were issuing T-bills. She never changed the quarterly funding, to deal with this better before the rates had to be ratcheted up. And so here we are. Now you've got $10 trillion of debt that's got to be turned over annually. Plus, you're adding $1 to $2 trillion of that every single year, probably more. And you need more buyers of treasuries. Where are they going to come from? Well, now you've got this whole fight in Congress about basically the stablecoin legislation that they're trying to make it. They're trying to create a situation where you have stable coins that are pegged to the US dollar, clearly, issued through banks. And the banks are the ones who are going to be buying these treasuries because they're using them for stable coins. Now the banks are in the fight over whether or not they have to pay interest to their customers who own these stable coins. I mean, it's just insidious, right? So they buy these stable coins. They get that yield on the stable coins, and they don't pass it on to the customers. It's basically what they're doing now. They get this cash sitting on the Fed balance sheet. They're getting paid interest on this, and they're not passing along to their customers. The customers get 0.002% interest rate, or 0.2% interest rate, instead of the 4 point whatever it should be. At this point, back then it was 4 point. At this point, it should be at least 3.6, 3.7%. They're giving them nothing. They want the same deal. They want to keep that, that profit engine going. And so, but anyways, to land the plane on this, now we've got an issue where Besant is at the Treasury. The rates are still high because the Fed refuses to lower them. Fed funds is still at on average 3.65%, because it's 3.5 to 3.75%. And so it's 3.6% or so. And the 10 years out at 4.3%. Everything is keyed off the 10-year, Danny. You know this. Mortgage rates, auto loan rates, personal lines of credit, your credit card rates, everything is keyed off the 10-year. And if it's at 4.3%, well, where do you think mortgages are? They're over 6%. It's keyed off of that. And that's what Trump wants to lower. But here's the thing that people keep hearing them say over and over and over again. I cannot emphasize this enough, is that Besant will be out there saying, we've got to lower rates. Trump will be out there saying, we got to lower rates. The Treasury will go lower rates. And what will happen? Well, when they lowered rates right before the election, they lowered them by 50 basis points, and the 10-year rose by 50 basis points. Why? Because people don't believe that either inflation is tackled or that they're going to be able to issue enough, have enough buyers of treasuries, 10-year treasuries, that they're going to be able to issue them at that rate. So what they're saying is they don't trust the government to not come in with a tsunami of long-dated paper at some point, because they have to. because the deficits are so high. The Lynn Alden, nothing stops this train. And my take on this has been the debt spiral. We're in it mathematically. There's just nothing we can do here. There's 4 doors, and this is how I like to frame it now. Is there's 4 doors, and 3 of them have been locked, and there's just no other option but the 4th door. The austerity door, locked. You're not going to get austerity. Neither party is going to cut expenses enough at the government level that it's going to make a difference. We tried with Doge. We're still at $2 trillion deficits.
What James Lavish offers is not comfort, but clarity. Short-term volatility is not a betrayal of Bitcoin's promise. It is a function of leverage, liquidity, and misunderstanding. The long-term trajectory remains governed by math, scarcity, and monetary reality. As knowledge spreads and institutions adopt, Bitcoin's role will shift from misunderstood risk asset to foundational store of value. The road there will be volatile, but history rewards those who understand the system before the system understands itself.